Hey, good morning. This is Meir Valensky with Driving Markets. I hope you're well. Okay, quick warning. Anything said in this piece is not investment advice. It's not financial advice. I'm not an investment advisor, not licensed financial advisor. It's an opinion only for media broadcast based on some experience. Whether you act on it or don't act on it, if you act on it to make money, that's great. If you act on it and lose money, then the losses are yours, etc., etc. Let's get into the actual meat of the morning show. Okay, so last week you had two massive figures out which really pleased the market. You had retail inflation, which is CPI, Consumer Price Index, and you had on Thursday the Producer Price Index, which is Producer Price Inflation. Both of those came in much lower than expected, and that gave a big boost to financial markets. The confidence, and it gave an injection of excitement with traders, and they went and bought the market, and they continued buying it on Wednesday, on Thursday, and on Friday. So the markets are at a very, very high level. Now, interestingly, the Nasdaq came out of bear territory and now is in bull territory, but I don't believe it, and you shouldn't believe it, in my opinion, because we still have the same environment in the geopolitical crisis that we had beforehand. What have we got? We've got supply chain issues. We've got Russia and Ukraine crisis. We've got grain and oil issues. We've got full employment, which will drive inflation higher. We've got a lack of shortage of manpower, which will drive inflation higher, especially on wages, salaries, which are seen to going up month by month. There's even companies in the States that are now paying you on the day. So when you finish working, at the end of the day, you get your paycheck. And that's never happened before. It's been very rare, maybe in the lower level manual factory workers, but normally you get paycheck once a month. So all the factors that are driving inflation higher are still there. Now, June, August, we may see a further drop in inflation because of the lowering of the oil price. The oil price is hovering between $90 and $100 a barrel. Unless it goes lower, then inflation will stay more or less the same in August. If oil comes down, then obviously inflation will drop again in August. My opinion is that oil's uptrend is not being broken and is likely to go higher, therefore pushing inflation up in September, October, November, especially during the winter months. Now, Europe is going to have a winter crisis because already the governments are trying to encourage people not to use too much electricity, not to use too much gas. Now, in Northern Europe, where it's going to get very, very cold, I'm not sure how they expect to heat a home which has got a young family in or small children. They're going to say, don't heat your home. People will freeze to death or suffer from hypothermia. So that's very unlikely. And Russia could turn off the gas, because what Russia's likely to do is invade Georgia and invade Kazakhstan, which are two major oil producing countries, to add to further its energy leverage on the West. If it does do that, Joe Biden, being extremely weak and being absolutely useless, the worst president the US has ever had with the Liberal Democrats, do not frighten Putin and do not frighten the Chinese. And therefore, what you're going to have is encouragement from Russia and from China to take further action. Which brings me on to the next point. China will probably invade Taiwan. Now's the opportunity, because they know that the US government is very, very weak and therefore likely to take over Taiwan. You've got major geopolitical stresses going on around the world, and that's going to impact overall financial markets. At these levels, it looks like the markets are good for a sell, because the downside is not yet finished. And again, by the end of the year, I'm calling the Dow at 25,000. I'm calling the Nasdaq at 7,000 still. The US dollar is going to go up, going to continue rising as interest rates rise within the US. Now, this week you've got retail sales out in the States, which is a big number, because that will generate into where the analysts see consumer confidence within Joe Public, within the US consumer. Now, if retail sales come in as higher than expected, that will give a boost to investors to think, okay, there's no recession, and therefore they'll go out and continue buying. However, because there's full employment, then you may have a further underlying pressure on inflation, because wage demands now are running at 10 to 15%. So there's people willing to go on strike in order to get a higher wage. So all of the factors are looking towards lower stock prices, higher bond prices, and of course higher grain and oil prices. Nothing's disappeared, and because we've got such a weak government in the US, that's encouraging the other dictators or communist leaders to take action and probably capitalize on the weakness of the US and its lack of power. The US dollar rose last week against all the majors. Why did it rise? Because the FX traders believe that there will be a lot of further interest rate rises in the States, and also if there is a geopolitical crisis, that will cause everyone to drive into the dollar as a safe haven. Bitcoin hit 25,000, now it's only 24,500. Those are your crypto traders. It looks again like a sell at these levels because it's a high risk asset, and anything high risk at the moment looks like a sell because it's had its bear rally, it's shot up, and now it needs to probably have some profit taking from the traders within the financial markets. Okay, what else have we got? We've got the minutes of the Fed meeting coming out this week as well, and that'll give us an indicator what the Fed thinks about the financial markets and about inflation going forward. All right, this is Meir Walensky with Driving Markets. Have a good day.